I'm Dr. Dave Janda. Welcome back to the Insider Insight Show. I am honored to have back with me someone who is a very dear friend, Bill Holter, and someone who, boy, is this great timing, actually. Uh, with Liberation Day having occurred this past week and the ramifications thereof, I cannot think of a better person to dissect the before, during, and after events than the best forensic financial market analyst on the planet. That's my guest, my buddy, your buddy, Bill Holter. Website BillHolter.com. For those of you not familiar with Bill, he has had a lengthy career in financial services, and he retired, in 2006. I'm not sure you can say he ever retired, Bill. And moved his family out of the United States. Good timing considering what was going to happen in financial markets in 2007. He returned in 2011 and currently makes his home in the great state of Texas. He joined a great organization, Miles Franklin, as an associate writer. Bill is a precious metals broker as well for Miles Franklin. MilesFranklin.com, Bill Holter site, BillHolter.com. Now, Bill has produced a tremendous amount of incredibly valuable information to guide folks over the years, available at BillHolter.com. He is former partners with Jim St. Clair, recently passed away, God rest his soul. And Jim was known as Mr. Gold, and when Jim passed away, that title was passed on to, and rightfully so, the only person it should have been passed on to, Bill Holter. BillHolter.com. It's my honor, privilege, and pleasure to welcome back the great Bill Holter. Bill, welcome back.
Thank you for having me back, Dave.
Okay, Bill. So I want to do a action report here, if you will, on Liberation Day. Now, going into Liberation Day, and I don't want to go into the distant past. We've dissected that, but I want to go to the recent past. Many folks would contact me and say, Dave, I don't quite understand why precious metals, those markets have been so manipulated, but for the past couple years, they haven't been acted as wonky as they had before with the gross manipulation. And what I've told them, Bill, and you're the expert, please correct me if I'm wrong. Really, if you look back to March of 2022, when Russia's assets were essentially stolen from them during the Biden administration, because as it related to their punishment for the Ukraine war, that changed not just Russia's investment horizon and what they were doing in operations, but every country in the world, because they said, we don't want to have our assets seized. And this is where gold and silver took off. Now, Bill, am I wrong in that assessment?
No, you're correct, but your date or the timeline is off. It actually happened either October or November of 23 is when the invasion was March of 2022. But the monies were sequestered in October, November of 23. And if you look at a chart, all you have to do is look at the bottom, the last bottom. And that was exactly when Russia had their 300 billion in reserves sequestered, stolen, whatever you want to call it. And what that did basically was it told the rest of the world, hey, if the U.S. could do that to Russia, they can do it to anyone. Mm-hmm. And that's when you started to see foreign ownership of treasuries. Basically, the increases stopped, and you saw some leakage out of treasuries, and those monies have gone into primarily gold, but also silver. So it was a fear move by foreign sovereign treasuries and central banks.
And Bill, you have stated, put on the record, the first guy, really for many years, the only guy, put on the record saying this system will ultimately collapse because of a failure to deliver as it relates to precious metals.
Right.
You were derided for that. You were demonized for that. But Bill...
No kidding.
Yeah. But I believe when we look at the financial landscape today, I believe that's exactly what we're seeing. Why we see gold going up, not just incrementally, but significantly. Why we see some, and it's difficult to say this on a day when, on the day after Liberation Day, when we're seeing a 7% cut in silver. But we're seeing the chokehold that the criminal banking syndicate has had on the precious metals actually not being quite the chokehold because of this failure to deliver issue that's manifesting himself. Am I seeing things to think that we're seeing what you've always described as what would happen, this failure to deliver issue in the precious metals?
Right. The failure to deliver, if you look at silver, I think the number's over 300 now. If you look at the amount of contracts outstanding on COMEX versus inventory, or available inventory to deliver, it's over 300 to 1. So there's 300 contracts for every 1 real ounce that's sitting in inventory available to deliver. This past month on COMEX, 81 million ounces, and by far that's a record. 81 million ounces were stood for delivery. Mm-hmm. That works out to be about 10% of total global annual silver production. Think about this. That's 10% in 1 month mm-hmm. on one exchange. That doesn't take into account any of the industrial demand. I mean, obviously, some of that silver has gone toward industrial mm-hmm. demand. Mm-hmm. But, I mean, you've got medicinal demand, industrial demand. You've got, monetary demand. Silver is, there's more uses for silver than probably any other commodity. Mm-hmm. And the fact that 81 million ounces were delivered in just 1 month, that's completely astounding. Then add to that, we know that there's been 300, 400, 500 tons of gold shipped into the United States over the last, call it 6 weeks. Well, the question is why? Mm-hmm. Why did all that metal ship? Well, I think you've got a couple obvious answers. One is that metal did move to the United States because they knew that April was going to be a big delivery month. And I think the last number I saw, it was between 125 and 150 tons, which is, I mean, that's, if not already, it's close to record territory. So they knew that there was going to be demand. They knew they were going to have to satisfy that demand. Mm-hmm. And the other thing is that for years and years and years, and this goes back to the 1990s, when central banks all over the world were leasing gold out, mm-hmm. and it was used as a carry trade. In other words, you could lease gold out at 2%. You could earn 5, 6, 7% in treasuries. So why not borrow the gold, pay 2%, take those funds and sell the gold, take those funds and put it into treasuries? It's a risk-free trade, mm-hmm. as long as the price of gold doesn't go higher. Mm-hmm. And that worked for years and years and years until I think it was Barrick that got caught short on it. Mm-hmm. They had sold forward too much gold, or more gold than was prudent, and the price of gold went higher, and they got margin calls. So that's the other thing, is I think gold has been coming back to the original entities that leased the gold out. The leases are being closed. What this has done, both in silver and gold, has set the situation up for a giant short squeeze, where the shorts are going to be forced to make purchase. The problem is there's not enough physical outstanding to deliver on these contracts that were sold naked. I took, we all took major hits left and right, telling us we were nuts, that there's no way, silver's plentiful, gold's plentiful. The problem is you can't print it. Mm-hmm. You can't print it on demand. I mean, even if gold was $4,000 an ounce tomorrow morning and silver was, say it's $100 an ounce, there's no way that the production is going to ramp up overnight. Mm-hmm. Mines don't work like that. There's such a big lag time or lead time to increasing your production, increasing the grade of ore that you're putting through the plants. So it's very inelastic, if you will, to price. The production is. So I think that's what you're looking at, are those two things, is that the leases are being paid back. they're being forced to be paid back, especially with these higher prices. And I do want to mention to you, Dave, you said that the price of gold has been leaping higher. It really has not leapt higher. This has been like a tractor or bulldozer in first gear. We've really not had any $50 or $100 moves upward or downward. We saw $80 was the peak drop on Liberation Day, and silver I think was 250. So on a chart, yes, you're going to see it, but I think when all is said and done, if you look at what the tariffs are going to do, the tariffs are going to clearly slow the global economy down. Not going to speed it up, it's going to slow it down. And when you slow the real economy down, what happens is less cash is generated. There's less cash flow. And this is happening. And we can also add Doge in there, that the monies that aren't going to be spent by Doge. That's another topic. It's a topic one on top of the other. But less cash flow coming out of the real economy, and of course less cash flow being deficit spent by the U.S. means less money available to service the gargantuan debt that's been created. We are more levered on any basis, on any ratio, percentage basis you want to look at, than any time in the history of history. And this incredible leverage is being met with less cash flow. So what could possibly go wrong?
So with the cash flow, there has been this theory put forward that as there's less cash flow, and as you mentioned, less cash flow to service the debt, one way to address that, currently on the books, the U.S. government has gold valued at $42 and change per ounce. Now, from an accounting standpoint, this might sound like a gimmick, but it has actually been done in the past, right? Where, let's say the government decides we're not going to keep that value of gold at $42.33 or whatever it is an ounce. We're going to raise that to $3,000. That, in a book ledger form, creates $800 billion worth of cash, potentially of which could be used to buy existing debt, right? And bring that in and then issue new debt at a lower interest rate because, as you mentioned, the economy, the world economy, including the United States economy, we're already seeing interest rates decreasing. So what's your take on that philosophy about the revaluation of gold? And it not just maybe 3,000, some people talking much higher than that. What's your take on that, Bill?
I guess two words: ham sandwich. It's nothing. $800 billion today is nothing.
Right.
I could be wrong, but I'm pretty sure this fiscal year we've already deficit spent over $800 billion. And the fiscal year started what? October 1st. I mean, we're going to be close to $2 trillion. If you look at just the interest alone that we're paying, it's going to be $1.5 trillion this year. So at $3,000, it's a ham sandwich. At $30,000, it's $8 trillion. That's still not even a quarter of what we owe. And from the standpoint of it's on the books at $42 an ounce, and yes, that was an accounting gimmick for years and years and years, because that was the U.S. government not admitting, if you will, or not endorsing the market price of gold. So now all of a sudden they're saying, well, we're going to revalue it to the market, whatever the market price is. And that's basically the Treasury saying, okay, well, it really wasn't $42 like we told you. And we were telling, and they're not going to say this part, but we were telling you it's $42 an ounce because we wanted you to think that gold is not money, that gold was not worthless, but, not important.
A barbarous relic.
Right, a barbarous relic.
Right.
And that allowed the United States to create this humongous debt facade
Mm-hmm.
that U.S. Treasuries were used for what the last since 1971, since we went off the gold standard, Treasuries were used as the foundation to the financial system
Mm-hmm.
worldwide. And now talk about a foundation made of sand. I mean, treasuries are issued and backed by a bankrupt entity, an insolvent entity.
Mm-hmm. 36 trillion, not including unfunded liabilities and mandates, that can take it up to a couple hundred trillion, right?
Well, yeah, and is the 36 trillion real? Is there more than that outstanding? I'm guessing
Well,
there is because we found out that there's 14 magic money computers that just
that's right.
spit money.
I was just about to go. Elon Musk spoke about the 14 magic money computers that were producing trillions of dollars worth of cash out of thin air and have been doing so for years.
Well, and the question is, did any of that money, was it accounted for as part of money supply? And I don't believe it was. And if it was not, then how do you actually do a calculation? I mean, that money supply is obviously an important metric to
Mm-hmm.
look at.
Mm-hmm.
Then it leads to, is the 36, 37 trillion, is that all that's out there? Or is there more off books that's real, that's real debt, but it's not showing up on the books?
Well, and that makes it awfully difficult to navigate these markets because, Bill, I'm convinced that there isn't any data that we're being given or being shown that's legitimate. Money supply, right? When you start adding the magic money machines in, the 14 of computers that Musk speaks about. We just had this the other day, actually, the CME, right? The Friday before Liberation Day, supposedly there were, I don't know, an extra 45,000 contracts. And that magically, man, we're talking magically disappeared when the final numbers were reported. So, Bill, here's the question. Was that just a clerical error, do you think, or was there something else going on here? Because when you kind of dissect through the numbers, if it really was going to be 45,000 higher, I didn't see the trading numbers behind that to indicate it was going to be 45,000 higher. So you're the expert. What was your take on that? Was that just a fat finger thing, or what do you think?
I forget what the actual number was, but I think the day that 45,000 contracts disappeared, I think the volume on that particular contract was 5,800 or something like that for the day. So how did 45,000 contracts disappear? I'm just going to say you're correct. I think every number that we get, whether it be inflation, unemployment, GDP, they're all bullshit. They've all been bullshit for years and years. And I think we're at the stage now. Doge is kind of exposing the fact that we've been lied to on so many different things. They're pulling the curtain back, and as the curtain comes back, I think people are just going to go. People are going to freak out because there's proof, there's actual evidence that the things we've been told have been completely wrong.
And the people.
And I do. Let me say one other thing, Dave.
Yeah.
I do want to say that it's almost like, and I don't want to get into a left-right thing.
No, I know. I don't believe you.
But if you look at, for instance, if you look at the errors in election counting, they always favor the Democrats.
Yeah, they do.
Never favor the Republicans. And what I'm saying with these statistics, they always favor the blue sky, the beautiful, everything's perfect scenario, versus if they went the other way, it would show deterioration. And deterioration, I mean, you can see, any person living can see that the standard of living today has deteriorated greatly compared to 5 years ago, 10 years ago, 20, 30, 40 years ago. Yet the numbers say everything's better.
Well, and the people that raise a red flag and say problems, folks yourself, a number of us that bring out this information, are deemed, we'll be kind, conspiracy theorists, right? So Germany, as you know, the German politicians just came out with a position saying they're worried about the gold, it actually being there in the U.S. vaults that they believe it, and rightfully is theirs, right? So many people say, well, this is nuts that they believe it. Well, Bill, it's not that many years ago. Germany tried to get their gold back, and what happened? Educate our listeners, because people don't know about this.
Yeah, actually, I mean, and this was super simple to do. Nobody else did it. I wrote an article on it the day after Germany. I think what was the number? 320 tons or something like that they wanted back. And that was in 2000, I want to say 2013.
Mm-hmm.
And I immediately, and they were told, oh, it's going to take 2, 3, 4 years or more because you're talking about so much money and so much weight. Well, we just saw with our own eyes,
right?
300, 400, 500 tons were onshored within 4 weeks. So it can be done. And I looked it up at the time. A Boeing 747 cargo jet can hold 95 tons. So it would have taken 3 plane loads plus, a quarter filled 4th plane load to get all that gold. Now, when all was said and done, and I think it took 2.5 or 3 years to get them their 300 plus tons, when all was said and done, it wasn't even their gold that they got back. They got back bars where the serial numbers didn't match any of the serial numbers of the gold that Germany had originally deposited. So what does that tell you?
Mm-hmm.
Their gold had been leased out,
mm-hmm.
and their gold was replaced with, the same content of gold. So they did get that gold back, but it was not their gold.
So over a month ago, there was all this talk about auditing Fort Knox, auditing West Point, auditing Denver, auditing the New York Fed vaults underneath Manhattan that store our supposedly, 8,300 tons of gold for our country?
Altogether.
Right? Yeah, we haven't heard about that lately. Bill.
No.
Okay, so of the 8,300 tons, I know it's a guess. Do we have 8,299 tons, or do we have closer to 4,000 tons, or do we have closer to 1 ton?
My guess, and I have no way to prove it, obviously no one can prove or disprove it, but my guess is we probably have between 1,000 and 2,000 tons left.
And all this physical gold that you discussed that have come into this country over the past number of weeks, could some of that being brought into the country be used to try to, if you will, shore up for when they do this quote audit? But as we all know, when you do an audit, you got to look at, as you mentioned, bar numbers. You have to look at purity, so you don't have a bunch of coin melt there and the like. Could some of that being brought in, if not all of it being brought in, be used because they know they're short?
Could be, but it's not enough.
No.
I mean, 300, 400, 500 tons is not going to make up, if 1,000 tons or 3,000 or 5,000 or whatever left, how are you going to cover that up? The other thing is, it very well could be we have 5, 6, 7,000 tons still in the depositories, but that gold could be leased out. Mm-hmm. And how many times was it leased out? Mm-hmm. Was it leased out twice? Mm-hmm. Was it leased out 10 times, 20 times, 100 times? It's like selling the same piece of land over and over and over again. And then you've got, 50 people that say, hey, that's my piece of property. So, there's all kinds of sleight of hand. And I think the public now is getting to the point where they pretty much don't believe much of anything. Mm-hmm. And what was considered 10, 15, 20 years ago, complete crazy conspiracy theory, things that are talking about corruption or fraud or whatever, they're certainly more believable now because there's been so many different frauds that have been uncovered.
Mm-hmm. And a number of people have said, Bill, and I'd like you to address this, that the reason why all this tonnage of gold and silver has been coming in, and still is because of the tariffs that were kicking in on Liberation Day. Well, Bill, I do find that hard to believe.
Well, I found it hard to believe from the very beginning, and I was one of the few that said, no, it's not, it doesn't have to do with tariffs. And now we find out that bullion is not going to be tariffed. Right. And of course, you're going to have the people, the official story is going to be, well, that's why silver and gold went down.
That's right.
Because it was being hoarded, because they were fearful of tariffs, and then it was sold. I don't believe that for a moment. What you witnessed with the sell-off in gold and silver was done with paper. I don't believe for a minute that there were big sellers of physical gold. You do not have central banks that sell physical gold. And I mean, just from a retail standpoint, I can tell you I took in, 10, 12 orders all on the buy side. So that's retail, and retail and institutional are different. But I didn't see anybody selling real metal. So
to dissect this out a little more, on Liberation Day, when President Trump's in the Rose Garden, he starts talking about at 4:30, 4:45 in the afternoon on April 2nd about the tariffs. The market starts tanking. It was closed, but the futures started tanking. But gold went. I think it had closed 31.64, went up to 3,200. Boom. And silver, which had closed around $34.45 or something like that, went up to, boom, over 35. And okay. And then futures continued to sell off. And then overnight, we saw gold get hammered and silver get really hammered for, like, I think gold was down, 1%, a little over, and silver about 7%. And you're right.
Yeah,
so the talking heads were saying, well, the reason is because there are no tariffs put on gold and silver or some other precious metal, other metals. So this is why they went down. Bill, you've already addressed this today, but I think it bears repeating. This is a not physical event. Bill, I was not aware of planes being loaded, Boeings being loaded with gold and silver in New York, Denver, or around West Point, and being flown out of the country because, well, they're not being tariffed, so it's going to go back home to wherever it was going. No. Bill, this is a paper-driven event. So, Bill, in my infantile way of thinking about it, or novice way of thinking about it, I'm thinking, you know what? They're blowing a bunch of paper at this because, one, they sure don't want gold and silver going up when everything else, when the stock market's going down 1,500 points, because then people would say, hey, wait a minute, that's doing well. Everything else is getting hammered. I'm going there. They don't want that, so they got to throw this.
Can't have that.
Yeah, so they throw fraudulent paper. They throw fraudulent paper contracts that aren't backed by anything to drive the price down, and they're also hoping, in the process of doing this, that people that do hold physical gold and physical silver will shake out of it because, well, see, even now it's not good, so I'm going to get rid of it. Right? Am I thinking about this wrong?
Yeah, no, that's exactly right. I mean, they've done it. You could go back to Robert Rubin in 1996.
Yeah.
The strong dollar policy, or supposed strong dollar policy, but that's when the leasing in gold really ramped up. And the whole reason behind that was they wanted to be able to point at gold and say, see, gold bad, dollar good. And it allowed the Treasury over the years basically to borrow unlimited amounts.
Mm-hmm.
And let me give you a spoiler alert on this whole thing.
Yeah.
Just kind of wrap it together.
Yeah, please do.
We already talked about Doge. Yeah. We talked about the tariffs. It's going to slow things down. There's going to be less money in the system.
Mm-hmm.
In a levered system, a hyper-levered system that we have today, you're going to see massive defaults that are going to cascade. It's going to be like a huge domino string. And the only two the only two monies on the planet that are not part of that domino string are gold and silver.
Right.
They will be the last two men standing simply because they cannot bankrupt. They don't owe interest, so they can't default on paying the interest. Um, they can't default on the final payment because they are the final payment. You know, an ounce of gold in your hand or an ounce of silver in your hand is, I guess, the word IS. I don't know how better to say it. Gold and silver are money. They're money that is not usury money. There's no interest involved with it. So where all this goes is it's a collapse. It's a global bankruptcy, if you will. Not absolutely everything's going to go under, but levered entities are going to go under, and entities that are not levered are going to see their cash flow decimated. But gold and silver, like I said, will be the two last men standing, and because they're the only thing that is standing and looks to be safe, they're going to accrue huge inflows because they will be perceived as the only two safe havens on the planet.
And actually, some of the sell-off, whatever sold-off, not physical, but whatever people were selling as far as paper contracts, maybe potentially some of them through hedge funds and the like, were because they were going under in all their, you name NVIDIA, Apple stock positions, so they needed something that had some value to them, so they were selling their precious metals, which helped bring them down further in that first 24 hours after Liberation Day. Is that a...
Yeah, there obviously had to be some of that, but I don't think that's a big thing.
Right.
But what that brings to mind is understand that the entire system is grossly over-leveraged.
Right.
And gold and silver are both grossly over-levered. However, it's to the short side, not the long side. Mm-hmm. Everything else is levered to the long side, and that leverage is holding asset prices up. The leverage in gold and silver is on the short side, holding the prices down. Exactly. So when this thing does actually break, the shock is going to be that gold and silver become unobtainium. They go to prices that are unimaginable. Whatever the highest price you've ever heard forecast in gold or forecast in silver is going to be way, way, way below where the actual price gets to. And that's because it will be the greatest short squeeze of all time, because that leverage that has been put on to the short side has got to be covered. And the way to cover it is to buy.
Well, and in fact, in your introduction, I mentioned Jim Sinclair, right?
Yeah.
Jim said, and you've spoken about Jim saying this. He got a lot of heat for it years ago, right?
He did.
Yeah, re-educate our listeners about what Jim was saying, that there would come a day when
you would see gold move 100, 200 plus per day, and you're going to see silver move $5, $10, $25 per day. The volatility would explode, and this is the very beginning, I think, of the volatility. You're watching. I think Liberation Day, when history looks back at it, is going to be the reverse of August 15, 1971.
Oh, when Nixon took us off the gold standard.
Right. Because I think what you're going to see is that gold is truly come into the system as a monetary metal, even though 50 years ago or a little bit more than 50 years ago, the U.S., the Western powers tried to demonetize gold, and basically it worked for a few years. It worked for 10, 15, 20 years up until about the year 2000. But the problem is they can't print it, and they over borrowed, which means they had to overprint the currencies themselves. And the rest is history. But I think they're going to look back and see Liberation Day was an important day for everything, but really a point in time where things definitely changed.
Bill, during President Trump's speech in the Rose Garden on Liberation Day, as he was presenting the tariffs, on several occasions in that speech, he spoke about the golden age of America.
Right.
Now, I don't believe in coincidences. I'm too old and ornery to believe in coincidences, right? I don't think that was a coincidence. I actually think what he was alluding to those that could grasp it, was that he was in fact reversing what occurred in August of 1971 with the decoupling of the dollar to gold, a hard asset. Am I off in that? Am I reading too much into this?
No, I think you're right. And I mean, if you have to understand the Trump family, they were big supporters of the John Birch Society.
Mm-hmm.
They were actually in or invested into gold mining. It's a family that understands gold. And what was one of the prominent portraits in the Oval Office during the first administration, and is up again?
Andrew Jackson.
Andrew Jackson, exactly. And Andrew Jackson basically tried to get rid of, not, I don't want to say private banking, but he wanted the money to be issued by the Treasury debt free, as opposed to usury money that we have now. So I think without a doubt, Trump, I think he does understand that, what he's doing and trying to bring gold back into the system and tether our financial systems in some manner to or with gold.
It's interesting, Bill. I've had a couple of friends that have had meetings in the Oval Office recently, and they don't know each other, but they both called me pretty soon after they walked out of the Oval Office and said, "Hey, Dave, I just want to tell you something." And they both said the same thing. And they hadn't talked. They weren't at the same meeting. They go, "I've never seen so much gold in the Oval Office." They go, if you look behind him when he's having these meetings with these heads, there's all these gold pieces of not pottery, but of gold items on the mantle. And they go, he even brought these gold cherubs in that he's put over the doorways in the Oval Office. And he has this gold trophy from FIFA there that he insists on telling you about, how this thing's going to be worth so much money in the future because it's made of gold.
Well, I guess there you have it. Yeah, Dave, I went to, I guess it was about 3 years ago now. I actually went to Mar-a-Lago. It's a small conference with President Trump, well, ex-President Trump at that point. He spoke for about 45 minutes at it. And I can tell you, walking into Mar-a-Lago, and I've been to, some pretty decent places all over the world,
Right.
Nice hotels. I have never seen so much gold crown molding, gold molding along the baseboards. I've never seen, it was the most opulent place I think I've ever been. And basically because there was gold everywhere.
Yeah, did he say so? Did he acknowledge you or something at one point?
Yeah, I wish he had said Bill,
Yeah.
but yeah, he said that the two, and he did say some things that he would never say
Yeah, in public.
in public, with reporters and filmed. But he said at that point he thought the two biggest potential problems were World War III and the U.S. losing the dollar as the world's reserve currency. And when he said that about the dollar, losing that status, he looked right over at me and goes, "Isn't that right?" I wish he'd said Bill, so I knew for sure, but I'm pretty sure. And I do know for a fact that he knew Jim Sinclair.
Yeah.
So it would just follow that he knows who I am.
So, Bill, play this out now. Now we're now D-Day, Liberation Day now, and we're moving down the pipe here. there are some folks, if you listen to the pundits, that say this whole thing is going to blow up and it's going to be a disaster, and everything, including the precious metals, are they're done for, and the like. Where do you think we're going to be in 6 months across the board here?
I would hope that within 6 months we're not going through the great taking,
Yeah,
because that's where it's going to end up.
yeah.
Um, there is going to be there's going to be an absolute financial calamity bigger and grander than anything we've ever seen. I mean, the Great Depression is going to look like a kindergarten, first grade party compared to what we're headed to. And the fact that all of these laws all over the world have been placed on the books, the ink is dry, it's a done deal. And they've started in 2014. So basically, for 10 years, they put laws on the books that classifies your asset, which is actually collateral on your institution's books. It classifies those assets legally as the custodian's assets. So if your bank, your broker, your insurance company goes down, they're legally allowed, and you have no legal recourse whatsoever, to take your stuff, to take your assets, and use those to bail themselves out. It's going to be a monumental bail-in where the original owners of the asset, of the collateral, get locked out legally, and have no legal recourse whatsoever. So that's where we're headed. And I guess my answer would be, I hope we're not there in 6 months.
And the only
But it's
way,
coming.
and the only way to provide yourself with a type of financial lifeboat is to hold something in your hand that you own that's there is no, what you've described earlier as counterparty risk, right? No
Right,
debt
exactly.
associated,
Yep.
no claims against it. Holding physical precious metals, because in the 5,000 years at least that we're aware of, in times like this, the entities that have withstood that storm, that financial hurricane that provided a store of value, you go back to the basics, were physical gold and physical silver. Is that too simplistic of a way to think about it?
Oh, no, that's absolutely correct. But you need to go further. For instance, if you have stocks on a broker, and you can't not do this with mutual funds. So if you're in mutual funds, I'm not sure how that's going to work. But with individual stocks, you just simply want to tell your broker, ship my certificate to the transfer agent electronically. Once your transfer agent has those shares on their books, you tell the transfer agent, send me my certificate. That is hard proof. That's like a car title. It's like a deed to a property. And there's other things you can do through trust work and how the ownership reads on your properties. The whole idea is you want as few counterparties between you and your actual asset, because the way the laws read now, it's in their favor, not yours. And you don't have any legal recourse once this thing goes down and defaults are happening left and right and the dominoes are falling. Your assets are going to go with that. You could be a you could have 100 million, 500 million, you could be a billionaire. And if you have not taken this into account, you're going to end up just like everyone else, with nothing.
Bill, you get a lot of grief for what you say and what you do, and you get
You
a lot.
think?
Yeah, I do. I know, but I thank you, Bill, for having the perseverance and the dedication and the sacrifice on behalf of every person willing to listen, and the courage to tell people what they need to know. It's undoubtedly what they probably don't want to hear, but it's information they need to know, because if they know, then they can act upon it. And if they act upon it, they can at least protect themselves to some degree, as opposed to being helpless and hopeless as this unravels. So, Bill, educate our listeners on how they can get more Bill Holter and follow you 24/7.
Yeah, you can go to billholter.com. There is a contact button. There's three or four areas you want to look at. There is one good area. It's called Grizzly's Corner. It's on prepping. I think that's from a true. Uh, it's called Grizzly's Corner because I call the guy Grizzly Adams. I mean,
Mhm.
this guy could live off the land. So there's some really good stuff there. I post all of my interviews and other interviews on an interview column. And I just post stuff, three, four, five things every day that I think are of interest. And, I'll write maybe a sentence or a paragraph or a couple paragraphs on what I think, the current events mean. So you can go to that. If you want to reach me directly, you can contact my business email. It's just BHOLTER at proton.me. And I did mention this the other day, and I'm going to start doing this on all of my interviews. I believe starting in June, and I may end up doing one a month or one every 2 months, but I'm gonna travel and I'm gonna start doing live conferences.
Oh, that's fantastic.
Yeah, so I'll keep you posted on that,
Oh,
and
that would be
I'll
great.
as it comes together.
And you'll have your schedule on your website too.
Yeah, exactly.
Oh, that's fantastic, Bill. All right. Well, I hope you work in the Midwest so we can get down to see you. I thank you, Bill Holter, for everything you have done, are doing, and will do. I thank you folks for joining me today and us today. Until next time. Dave Janda signing off. Dream big and dare to fail. Thanks for your time today. Listen to Bill.
Yes.
Hi, I'm Dr. Dave Janda, and well, we have Bill Holter for a bonus round. Bill and I taped our original interview this past Thursday, about a day after the announcement of the of from Liberation Day, or whatever you want to call it. And then all of a sudden on Friday morning, China came in and said that they were going to institute a 34% additional tariff on U.S. goods. So the sea changed. And because of that sea change, Bill and I thought we should do a bonus round, talking about the developments that occurred after the initial recording Bill and I had done. Now, I have sent you, our subscribers, on very late Friday night, a position statement I wrote on tariffs. I'm not anti-tariff. What I am anti is not communicating what the tariffs would mean to people on Main Street and to every American and the ramifications. And apparently, we morphed what I call the bait and switch from being reciprocal tariffs, where when a company or country says, we're going to charge America 10%, and initially President Trump's position was, well, if you're going to charge us 10, we're going to charge you 10. That's reciprocal. Well, unfortunately, prior to the Rose Garden ceremony, minutes, hours before, more like hours, led by Howard Lutnick, the Secretary of Commerce, that got changed to, we're going to create a formula. Well, that formula led to taking a lot of people off guard, which is why we've seen this financial market chaos with the S&P down 12%, gold I think is down 6% and change, silver down about 15%, other commodities down 13, 14, 15, 16%. In other words, a financial chaos because there wasn't the appropriate communication of what was going to be coming. And what I put in that position paper I sent to you was, look, the people who really benefited from this were the people that got us in this mess to begin with, the criminal banking syndicate, because it allowed them a way to get out of their gold and silver shorts, their commodity shorts, and any other shorts they had. And that way they reaped huge financial gain. And that's why Bill and I wanted to get back together, because what's happened now with the market going down 1,600 points one day, 22,000 plus points the next, we're now getting into uncharted territory which could lead to if you will, a daisy chain derivative implosion. And this is where Bill comes to the forefront because he yet again predicted this type of scenario occurring. So Bill, am I being hyperbolic by saying we're now facing a derivative daisy chain reaction that potentially takes the system down, something that you predicted long ago? Am I off on that assessment?
No, you're absolutely right, Dave. If you look at what happened on Thursday and Friday, you got to say equities basically were down 10% in 48 hours. And there's all sorts of margin calls that need to be met before the market opens Monday morning. Otherwise, the margin clerk liquidates the positions. And what you're saying, as far as the banks were short, they were about to get stuffed. That was creating huge margin calls for the banks. So by reversing this thing and pulling the rug out from under it, they relieved the stress there, but now they've created stress on just regular investors and also, hedge funds. I mean, big institutional accounts. So there's a huge margin call that's got to be met before Monday morning. It's going to be very interesting to see what happens Monday. If it was my guess, they'll probably let it open down and probably down hard. And you'll see the plunge protection team come in because they understand this. I mean, if we know that there's margin calls and it is a danger to systemically, it's a danger because if you get a daisy chain of margin calls going off, then all bets are off because you've got to worry about, who's your counterparty? Is your counterparty solvent? Bank A, Bank B, Bank C. Bank B's not going to do business with Bank C if they know that C has done business with A, but A is in trouble. And this goes back to the very same thing that happened in 2008, 2009. It was a hunt to find out who died. And of course, that was bailed out by central banks. This time around, there is no white knight. There's no who's going to step in and bail out the central banks. There is no entity big enough. And the system is so much larger now than it was back in 2008. And it makes the central banks almost meaningless, their size versus the size of the system that's imploding. So my guess is Monday morning, you're going to see a down hard to start. And the plunge protection team has got to hope that they can get it positive before the end of the day. Because if they don't, then you get more margin calls and this thing will feed on itself. Now, whether it's Monday or a week or two from now or a month or two from now, we're going to have some type of systemic event where margin calls can't be met. And just like we saw, you go all the way back to 1987. Tuesday, the day after the crash, it was almost, I think it was nearly 2 hours before they could get markets open. And they didn't really understand. I mean, they're professionals at it now, and they learned from 1987. Back then, a whopping $6 million. I mean, which is, not even pocket change today. But $6 million went into the value line futures, which were the only ones that were open at the time on the buy side. And it pushed those futures higher, and little by little, other indexes opened, and they were able to get the market opened. I think it opened down 140 points first thing Tuesday morning. By the end of the day, we were up 200-300 points. That's the type of action I think that they're hoping for this coming Monday, because if they don't, this is going to spread like a wildfire.
And this ends up being, and it's something we've spoken about months ago. David Webb wrote about the Great Taking, right?
Yeah, exactly.
And that's where we're headed, Bill.
Well, that is the end game. I mean, they've put all these laws into place where you're not the actual owner of your stocks or bonds. Your broker is. And I mean, they've been putting these laws in place, and the ink is already dry on these since 2014. So everything legally is in place where if your broker, your custodian does become insolvent, legally they can take your stocks, your bonds, and use that to meet their margin calls. It then becomes no longer yours.
So we outlined this in our original interview about where we thought this is going. Well, unfortunately, Bill, where it's gone over the past day or two is exactly where we told people it was going. And our previous recommendation was, look, the only entities that do not have counterparty risk to them, in other words, debt associated, claims associated against it, are physical gold and physical silver.
Right.
Bill, has that changed in the past 48 hours?
No, it just got the end game got moved up. Now, is the end game Monday, Tuesday this week? I don't know. I will say, however, if you own stocks in companies that actually produce something real, and you have those stocks in your hand, there is no counterparty risk because your stock certificate is like a deed to a house or a title to a car or whatever. It's proof of your ownership. So if you actually hold the securities, you don't have counterparty risk, and you're in an area that's going to benefit going forward, meaning real assets, real companies that produce something real. You should be okay. But there are so few people today that actually have their certificates. You know, everybody's lumped in. They've got their brokerage accounts, and when brokers go down, you're going to lose your account.
You know, Bill, interesting coincidence that Tucker Carlson released an interview with Treasury Secretary Scott Bessent on Friday. And in that, there was a small portion of that interview where Tucker Carlson starts asking Bessent about gold.
Right.
And Bessent says, well, you know, one of the values of gold ownership, physical metals ownership, is that, well, you own it. There isn't any debt associated with it. Now, on the inside, I hear that Bessent is not very happy about the way this tariff issue, this tariff operation was handled, right? And I think he was giving people, Bill, a heads up because he saw what he was on the internal meetings. He saw what was happening. He was, as I understand it, voicing concern. It wasn't being listened to. And then all of a sudden he's on with Tucker Carlson talking about, well, you know, and because Carlson asked him, you know, well, why, there's all this gold and all this silver coming into the country. I mean, you know, Ed, I looked at this, Bill, over the last 4 weeks, and please tell me if I'm wrong on this, there have been, with gold, 6.5 million ounces brought into COMEX and reportedly the GLD, just those two. And with silver, there was 59.8 million ounces just brought into COMEX.
Oh, that's correct. And I think, you know, whether Bessent is a deep state player or not, I mean, if he's a deep state player, then understand what he told you. Their code of ethics, if you will, is you can never blindside people. Right. You've got to give them some type of heads up. And if they miss it, oh, well, they're too stupid and they deserve to be bankrupted. That's if he's a deep state player. If he's not a deep state player and it was his heart talking, yeah, he absolutely was trying to give people a heads up as to what the safe haven is.
Mm-hmm. Now,
so I mean, he told the truth.
Yeah. So since you and I spoke, silver and gold had been down. Well, they're down further now, right? So the question is, people will say, and this is appropriate to address now, well, they're safe havens. Why haven't they been so safe? In a sense that why have the hucksters, the criminals, been able to bring gold down almost 7% and silver down 15%? And we know the answer, but it bears repeating, Bill, for the newcomers to our crowd. Why is that the case?
Basically, gold and silver are your end game safe haven. I mean, they can be messed with, and they've been doing this since the 1970s. They can mess with gold and silver contracts, and they do that continually. And they've done it. I mean, go back to the year 2000. Gold was what, $270 an ounce.
Right.
Call it $300 an ounce. All along the way, the price of gold was never unfettered. I mean, there's always been naked shorting, but you had gold go from sub 300 to over 3,000. So there's a 10 bagger for you in an asset that cannot bankrupt. So you did that. You had a 10 bagger, which, by the way, happens to be about the best asset you could have been in since the year 2000. You did that with no risk.
Right.
Now, people will say, oh, but the price goes up, the price goes down, there's risk. No, price doesn't matter. When you're talking about the absolute end game, either you have wealth or you don't have wealth.
Right.
Either you own gold and silver or you don't. You have no gold and silver. Those are your lifeboats for when the system is broken and they can no longer, COMEX at that point would be irrelevant. Again, what is the value of a contract that cannot perform? The answer is zero. But that asset itself, basically gold and silver are going to be all the marbles.
And as you've always mentioned, they use these paper shenanigans. It wasn't a bunch of physical, Bill. We did not see any planes taking off from Kennedy International Airport or LaGuardia going back to Europe, bringing gold and silver back. In fact, Bill, on Thursday, so this hits on Wednesday, on Thursday, Bill, there were huge tonnage coming in again of gold and silver into our country, correct?
Yeah, and that shows you that the gold and silver coming in before the tariffs, that's not the reason for the gold and silver coming into the country, because we saw 2 more days of metal being onshored, which would have been, it turns out there was no tariffs on gold or silver anyway,
right.
But you still had metal coming in. So the tariffs are not the reason for the metal coming onshore. And as we talked about on Thursday, the metal coming onshore is more than likely metal being returned to the original, the people who leased the metal. It's just being returned to the original owners.
And the original owners want it back because it is the ultimate basis in wealth.
Right. Gold is the absolute, when all the smoke clears, gold is going to be the absolute tier 1 asset, because it's a pristine credit, because it cannot bankrupt. And there is nothing else on the planet that you can compare to it. I mean, you can't compare U.S. Treasuries, you can't compare BOJ bonds, ECB bonds, and these bonds are what act as the foundation to the entire system. The problem is they can, and in many instances, they will default.
And the goal of taking the gold and silver down with paper criminal manipulations the past on Thursday and Friday was to try to get physical gold and silver out of the hands of Joe and Jane public and hand it over to the bankers, who were the ones that blew the prices down with this paper manipulation, because the end is near on the financial front. Is that a fair assessment?
Yeah, exactly. They've done this all along. They try to scare people into selling. They start the selling, and then you get margin calls. You get trend followers that sell. And who do they sell to? The banks are standing, below the bid, and they gobble everything up that gets sold. So, I mean, this is just another instance of wash, rinse, and repeat.
Final question, Bill. The best thing people can do at this point in this time of financial turbulence, let's call it.
Have as little debt as possible. Have as many of your assets in your hand. When I say in your hand, I'm talking about stock certificates, and own as much gold and silver as you can, because they will accrue when this thing gets flushed. That capital has got to find a new place to reside, and you're going to have a rush into gold and silver to the point where there's no supply left, and it goes into hiding.
So, Bill, how can folks follow you one more time?
Just go to my website, billholter.com.
I'd like to thank you, Bill, for taking time out this weekend to do this bonus round to address the last 24 hours that occurred prior to the weekend in this financial goat rodeo. Probably best way to look at it.
Thank you. I thought it was important to do, at least do an addendum to what we talked about on Thursday.
No, I really appreciate it, Bill. And thank you for all that you have done. Thank you for your time. Thank you for your perseverance, dedication, and sacrifice. And as I mentioned previously, your courage of speaking about these issues that the criminal international banking syndicate wants no one to speak about. Because the more people that learn about it, the more people that become empowered and protected. And I thank you, Bill, and I thank you folks for joining us. Until next time, Dave Janda signing off. Dream big and dare to fail. Thanks for being with us today.